You are wrong. If you are saying that I'm a Bitcoin maxi, that always tries to push the Bitcoin price, that always says Bitcoin will only go up from here, then you are wrong. And as a proof, we will talk about the worst case for Bitcoin after this drop. Bitcoin could go down all the way to 14K. That's what I think is the worst case scenario from here. It's not the most likely scenario, but it is a possibility. And the reason why I think that's possible is because of the realized price, the dynamic of Bitcoin's movement relative to the realized price. So that's in this chart over here. This is a very long-term chart starting in 2010, so where Bitcoin was just a few cents, all the way to today. And there is a measure called realized price that looks at what kind of price in aggregate did Bitcoin move in the past. When we look at the current price, we just look at for what price did demand and supply cross just recently, right? Who was the last person to buy and to sell? That's the current price. The realized price looks at all of the transactions in the past. So that's something we can only calculate using on-chain metrics. It's something that only exists in the crypto space, because there we can look at every single wallet and we can check out at what price did Bitcoin move the last time. So we look at the entirety of all of Bitcoin's wallets and we average those prices out. Thus, when the current price is above the realized price, then in aggregate the market is in profit. When the current price is below the realized price, then the market in aggregate is at losses. And historically what we can see is whenever the price is below the realized price, so the realized price is here in orange, whenever the price is below, this tends to be a very good buying opportunity. The market in aggregate is in losses and they simply just wait out those bearish times, right? Because over the long term, Bitcoin inflates less than fiat. You can simply just dollar cost average in. You can wait until the strong believers have bought enough over time and all the hype is gone to see a certain floor. And then when that floor is established, things can turn around and the next rally can come. Now let's look at how much can the current price drop below the realized price, because that is then the worst case scenario, right? This is what historically has happened. And let's look at the recent past, maybe the last 5 to 6 years. So let's zoom in over here and check how much did the price actually go below the realized price. This here is probably the lowest point it has ever been. We've got the current price of 3,237 and the realized price at the time was 4,613. So the market in aggregate at this time of a depression, when the miners sold after the ICO crash, etc., right, end of the bear market 2018, the market in aggregate was at a loss of 30%. And so let's jump to today. The current realized price is at 20,361. So we just multiply this ratio by that realized price, $14,287. If history is any indication, this is potentially the lowest point. This is how much we have crashed in the past when there was a real hard bear market. And I don't have a crystal ball. I cannot say if we are going to go that low. But you have to be prepared. You have to allocate your portfolio in a way that in case we do hit that low of a price, that you don't get completely wiped out. Now, why would you invest in something that could potentially drop that much from here? And here comes my long-term Bitcoin bullishness. I do believe that the upside potential is high enough to justify the relatively large potential downside as well. Bitcoin has never been that illiquid, relatively speaking. When you look at the Bitcoin that hasn't moved for the last year, it's very close to all-time highs. That's what we see over here in this line. So almost 70% of all of Bitcoin haven't moved for at least 1 year. That's the hodl waves here. And look what happened in the past. When this was comparatively high, when Bitcoin was relatively illiquid, when it was mainly held by long-term holders, we saw a massive rally afterwards, right? This is when Bitcoin moved from $450 roughly all the way to 20K. When that rally comes, the long-term holders tend to sell, right? Then it goes to the short-term holders and they tend to panic whenever we see a bit of a correction. Then the bear market materializes, more and more long-term holders continue to buy in, Bitcoin becomes more and more illiquid again, then we hit a new all-time high in illiquidity, right? An all-time high in how much of all of Bitcoin is held by for at least 1 year. Once we've hit that, Bitcoin went from 10k all the way to 69k. And now again, we are at very close to all-time highs here. So fundamentally, that's very, very strong. I have no doubt that Bitcoin at some point in the future will hit new all-time highs and that it will also cross the 100k and beyond. And by that logic, you've got a risk of going down from 26 to 14k. So that's a potential loss of 12k, but you've got upside potential of 74k, right, if we hit the 100k. Now the question is, what's the probability of each of those cases actually becoming true? But maybe what's even more important is, would you feel comfortable to double down on Bitcoin to buy the dip if we really hit the 14k in this very unlikely scenario? But let's say we do hit the 14k, would you be comfortable on buying more? And you can only answer this with yes if you're not yet over allocated to Bitcoin. So you need to have a very healthy allocation to Bitcoin. You need to have stocks as well, you need to have potentially bonds or precious metals, maybe something in property, and you need to be okay that in case we do see a massive drop, to potentially sell off some of that stock or some of the ETFs and move it into Bitcoin. If you're already with 60-70% of your capital in Bitcoin or in crypto and we do see a massive crash, it's very unlikely that you're okay to sell the stock, the only purchasing power that you have left, to double down on what has already corrected that much. But if you only have an allocation of say 20% to Bitcoin and now it goes down by 50%, then maybe you're much more likely to sell off some of the ETFs, right? So a healthy balance here is important. You have to consider, what would I psychologically do in case we hit that low of a price point in crypto? So even though the expected value on a bet on Bitcoin is probably positive, managing the risk is ultra critical. Have enough capital in other asset classes that aren't that highly correlated to crypto that you can then potentially move into crypto in case we do see further downward momentum. And yes, I do think it's likely we actually do see at least short term some more downward momentum. Following this channel, you know I do backtests, I do simulations of buying and selling Bitcoin, and I figured out what's the best exponential and the best simple moving average for Bitcoin. And whenever we are below those moving averages, we should rather be cautious. And with this recent crash, we did go below the best simple moving average and the best exponential moving average. The SMA is in turquoise, the EMA is in red. The SMA works better than the EMA. This is the 124-day simple moving average. Whenever we are below, we should rather be cautious, maybe even bet on falling prices. This is what the backtest suggests, and whenever we are above, we should be betting on rising prices. So I do think there is a strong chance we go at least for the next weeks further down from here. I am somewhat risk off now. But I will be doubling down again once we consolidate a bit, once we go above the 124-day SMA as well. Feel free to give this a like and share this with your friends. Looking also forward to your comments down below. What are you currently doing in this situation? So see you in the comments. Bye bye.